Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to be back to bring you another investor update. Joining me today is Asha Smelly, Assistant Manager of Sales and my co-host for today. Today we're discussing Kingston Wars and PJAM, and welcome back to the show, Asha.
Always good to be back with you, Rachel.
Perfect. If you like the content, don't forget to hit like and share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. Also, if you want to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. So I'll get started with Kingston Wars, and then I'll kick it off to Asha after. So let's do our usual recap. Kingston Wars is the region's leading multipurpose port terminal and logistics provider located right here in Kingston, Jamaica. It's actually its strategic location right here in Jamaica and its proximity to the Panama Canal that makes it a key transshipment hub in the Caribbean, connecting trade routes between the Americas, Europe, and Asia. The company has annual revenues of over 9 billion and a market cap of 37 billion, making it one of the top 12 largest companies listed on the Jamaica Stock Exchange. Today, we are seeing where the stock is, however, trading at $25.99 and a PE of 11.8 times, which is slightly above the main market PE of 7 times. So let's see what's driving this price. For the first quarter ending March 2024, the company reported a 12% increase in revenues, reaching $2.5 billion. Revenues are divided into two segments: the port terminal operations, which contribute to 70% of revenues, and the logistics services, which contribute to the remaining 30%. The terminal operations, which pretty much deals with the management and handling of cargoes at the port, experienced a slight 1% dip in revenues due to interest rate and inflation pressures, but as you know, we're optimistic that interest rates will begin to decline soon. But outside of that, they recently redeveloped Berth 7, which will allow them to berth or accommodate larger vessels. Plus, they're looking into further expansion this year into next year, which will further boost productivity and overall cargo handling capacity. So we're not concerned about that slight dip we saw this quarter. On the other side of the business, the logistics services operations continues to do well, with revenues in that division increasing by 33% over the prior year. Moving on to cost of sales, we are seeing where this line item increased 19%, which resulted in gross profits of 1.15 billion compared to 1.1 billion the prior year. Other operating income dipped 2%, while administrative expenses increased by 4%, which resulted in operating profit for the first quarter to increase by an overall 5%. After factoring finance costs and taxes, the company booked an 8% increase in net profits for the quarter to 746 million compared to 691 million the prior year. Examining their balance sheet, the company remains an asset-rich company with total assets amounting to 58 billion, shareholders' equity of 46 billion, and liabilities of only 11 billion. The market stats table does show that the stock is trading at a PE of 11 times relative to its earnings, which may suggest the company is either overvalued or the market is just simply pricing future earnings in the mix. What we view is the latter. Kingston Wars is a robust company with a strategic advantage due to its proximity to the Panama Canal. The ports have advanced infrastructure capable of accommodating large vessels, and they serve as a transshipment hub for one of the world's leading motor vehicle carriers. They're booking around 3.2 billion in profits, averaging around 700 million profits per quarter, which you'll see on the next slide. Despite being the market leaders, they continue to seek expansion, improve productivity and efficiency. So with these ongoing investments, I anticipate profits will continue to grow for the foreseeable future. So, this just reinforces my view that the stock is a solid blue chip company. It's currently trading at $25.99. It peaked at $35 back in March. And I see no reason why it can't return to that level as the market begins to correct itself later this year. It's also a dividend-paying stock with a dividend yield per stock unit of about 6 to 8 cents. Also, Kingston Wharves is a part of the Jamaica Producers Group, which recently merged with PJAM, creating a diversified conglomerate with significant influences across multiple industries. And, Kingston Wharves is their crown jewel. The company is led by a strong management team under Jeffrey Hall. The stock is also tightly held with the top 10 shareholders owning about 89% of the company. And if you're examining some of these shareholders, you'll notice that these are strategic plays for them, which signals their belief in the company as well. So again, a solid blue chip company that's worth investing in. Asha, what are your thoughts?
So, Rachel, I would echo the same sentiments that you have for Kingston Wharves. So I believe that they're poised for continued growth and they have a strong financial performance driven by strategic investments and their advantageous position in the market. Their recent capital investments, including a US $60 million expansion plan, has enhanced their logistics infrastructure and optimized their terminal operations, which enables them to handle increased cargo volumes to attract a diverse global clientele. The company's logistics services division, which has seen significant revenue and profit growth, is expected to continue benefiting from investments in warehousing and digital technologies. Additionally, they have the special economic zone status, which provides fiscal incentives that support competitive service offerings. So despite potential risks such as global supply chain disruptions and geopolitical tensions, Kingston Wharves' strategic positioning as a regional leader in logistics and port operations, along with its robust financial health and liquidity, positions it well to capitalize on the anticipated rebound in global trade volumes and the growing e-commerce sector. So the company's ability to navigate these challenges and leverage opportunities in nearshoring and e-commerce bodes well for its long-term profitability and shareholder value.
Thanks for that, Asha. Very insightful. So now I'm going to hand over to you to discuss PJAM.
So let's look at Pan Jamaica Group Limited. They were formerly known as PJAM Investments Limited, and they are a multinational conglomerate operating in 4 primary business segments: property and infrastructure, financial services, specialty foods, and global services. The group underwent a significant transformation in April 2023 following an amalgamation with Jamaica Producers Global Holdings Limited, resulting in a 34.5% ownership stake for JP and a rebranding to Pan Jamaica Group Limited. This strategic move has diversified PJAM's revenue stream and geographic footprint, positioning the group for enhanced growth and stability. So let's just jump to their 2023 performance. So the group's performance for the year ended 2023 demonstrated substantial growth and diversification of revenue streams. The group ended the year with revenues of $29 billion, with the most notable contributor being the specialty food segment, specifically through the European juice operations under the Juicy Group. This segment generated $16 billion in annual revenue, significantly boosting the group's financials. The merger led to 70% of the group's revenues being sourced from outside Jamaica, reflecting a more geographical diverse revenue base. Income from associated companies increased significantly in 2023, reaching $4.2 billion, up from $2.9 billion in 2022. This growth was driven primarily by the contributions from Sagicor Group Jamaica Limited and the newly included income from Geest Line Limited, a joint venture Caribbean shipping line. So looking at Q1 2024, PJAM reported a strong turnaround in this period with consolidated net profits of 1.2 billion compared to a loss of 6 million in the same period the previous year. Net profits attributable to shareholders was 769 million, reversing the loss of 11 million from the first quarter of 2023. Revenues for the quarter reached 9.8 billion, a substantial increase from 949 million recorded in Q1 2023. Let's dive a bit deeper with the company's performance. As mentioned prior, there are 4 segments driving the business. The property and infrastructure segment generated profit before finance cost and taxation of 512 million, up 95% from the previous year. This was driven by improved occupancies at the recently opened Rock Hotel, rate adjustments, and a one-off gain on the sale of property. Revenues increased by 8% to 1 billion. The financial services segment reported a profit before finance costs and taxation of 295 million, which is a 55% decline from the prior year due to a non-recurring accounting adjustment in the actuarial model at Sagicor. The company notes that the underlying business remains robust. The specialty food segment earned 5.8 billion in revenues and a profit before finance cost and taxation of 71 million, up from 0 in the prior year. The growth was primarily due to the consolidation of businesses acquired in the Jamaica Producers Holding amalgamation. Lastly, the global services segment earned a profit before finance cost and taxation of 910 million, a significant increase from 18 million in the previous year, with revenues totaling about 3 billion. The growth was driven by the consolidation again of logistics businesses post-amalgamation. So let's head over to the stock performance. The stock price of PJAM Group experienced fluctuations throughout the one-year period under review, reaching its highest year-to-date price of $52.84 on March 4, 2024, and the lowest year-to-date price of $44.50 on April 23, 2024. As of May 28, 2024, the stock price was trading at $50.69. So just looking at the financial highlights for the first quarter ended March 31st, 2024, we note gross revenues of 9.85 billion, an operating profit of 1.62 billion. They ended the quarter with net profits of 1.17 billion. They have an earnings per share of 47 cents. Total assets on the books amounts to 139 billion. Shareholders' equity we see increasing to 76 billion. So for the key statistics of the group, so PJAM has a rich price to earnings ratio compared to those companies listed on the main market of the Jamaica Stock Exchange. So with a PE of 25.03 times, this may suggest that investors have a high expectation for future growth with this company. Looking at the company's outlook, PJAM is poised for continued growth and expansion with a focus on enhancing shareholders' returns through strategic investments in the core business segment. The group plans to prioritize opportunities that offer scale, consistent returns, and competitive advantages. Future strategies include divesting non-core investment assets and leveraging enhanced capital, liquidity, and expertise gained from the amalgamation. The group's diversified revenue streams and increased exposure to major reserve currencies such as the euro and US dollar position it well for sustained growth. PJAM's strategic emphasis on property and infrastructure, financial services, specialty foods, and global services will drive long-term growth for shareholder value, ensuring resilience through economic cycles and capitalizing on other growth opportunities. So that's it for PJAM Group. We covered a lot. Rachel, do you have any insights to add?
Thanks for that, Asha. PJAM is a major player in the Jamaican and Caribbean investment landscape. As you mentioned, they focus on high-quality, long-term investments. This merger amalgamation with JP is the largest we've seen in recent times and has definitely put this stock on my radar. This strategic merger has formed a substantial conglomerate with significant growth potential, combining the strength of two robust independent companies. Therefore, I believe this will increase shareholder value and the stock will eventually go into this valuation. So, yeah, it's a hold for me for right now. And that's it for today's discussion, guys. I'd like to thank our viewers for tuning in today. Your support is always appreciated. I would also like to thank my co-host Asha for contributing to today's discussion. If you're curious about updates on our virtual investor forum and updates, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe and remember, wise investors, slow and steady wins the race.